All right, let's jump right into this explainer. Today, we're putting on our head of growth hats. I want you to think like a lead growth strategist at a massive exchange. Places like Binance, Hyperliquid, or Coinbase. We're going to deconstruct the Loaf market's private beta platform, but we're absolutely ignoring the back-end tech for a minute. Instead, we're looking at it purely as a highly optimized user acquisition and retention funnel. The big question is, how exactly do you take the oldest, slowest asset class in human history and engineer it for exponential, viral growth? We're going to break down their acquisition hooks, retention loops, and the mechanics designed to make users not just sign up, but obsessively keep trading.
So we have to start right at the top of the funnel to agitate the core problem, because every great growth strategy starts with a massive total addressable market. And honestly, you literally do not get bigger than this number, $330 trillion. That is the staggering value of the world's real estate. It's the largest asset class on Earth, hands down, yet remains completely illiquid. I mean, equities trade in milliseconds, right? But property, it's held in stone and takes months to transact. From a growth perspective, that illiquidity is massive, awful friction. But hey, friction is just an opportunity for disruption. If you can unlock even a fraction of a percent of this $330 trillion market and make it actually flow freely, you're looking at an unprecedented level of user acquisition.
Okay, so at the very top of the funnel, reducing your users' time to value is everything. You want them to hit that aha moment as quickly as humanly possible. Loaf does this brilliantly by offering new users a simulated $100,000 portfolio in their private beta. It creates a completely risk-free sandbox. It totally removes all the anxiety of having to connect a real bank account or a crypto wallet right off the bat. Because what's going to make a user actually sign up? Free capital to play with. Think about the crazy referral system you could build around this. Imagine texting a friend, "Hey, I just set you $100,000 to day trade the Sydney Opera House. Click here to claim it." That right there is how you engineer an exponential viral hook.
Now, once you've got them hooked with that free capital, you have to ruthlessly eliminate the barriers that stop them from taking real action. Let's be real. Traditional real estate is a growth marketer's worst nightmare. It's illiquid, it requires massive upfront capital, and it takes 30 to 90 agonizing days just to settle. Loop is designed to relentlessly eliminate every single piece of that friction. They counter with a liquid market, a 1-second settlement time, and order processing in 30 microseconds. They're essentially dragging the sluggish physical world kicking and screaming into the hyper-fast digital realm. By stripping away months of waiting, they transform what used to be a once-in-a-decade purchase into a daily active habit.
So, to convert that casual interest into direct action, we have to look at the minimum investment threshold. In traditional property, the massive down payment gatekeeps 99% of the population completely out of the market? By dropping that floor to just $100, Loaf blows the top of the funnel wide open. They aren't just targeting the 1% who can casually afford a $50 million waterfront property. They are targeting literally anyone with $100 and a smartphone. Pair that ultra-low barrier with instant settlement speed and a totally frictionless sign-up process, boom. You have the perfect recipe for exponential user acquisition.
Moving down the funnel, how do we tackle retention? Well, Loft hasn't built some boring traditional real estate portal. Instead, they've completely replaced slow property agents with a high-speed, crypto-style trading interface. We're talking instant market orders, precise token quantities, and real-time order books showing bids and asks. By using familiar financial infrastructure, they tap directly into the existing psychology of day traders. It completely gamifies the experience. When you give users a live flashing order book for a physical building, you drastically increase the frequency of their interactions. It shifts the user mindset from "I'm buying a house" to "I'm actively trading a dynamic market."
And to keep those daily active users engaged long-term, you absolutely need a compelling feedback loop. They do this by feeding users actionable, high-contrast market data, creating a massive retention engine. Check this out. When users see that average Australian properties returned about 46.8% over 5 years, while Loaf's pipeline properties in outperforming suburbs returned 110%, it triggers a huge psychological response. People want to beat the market, right? By constantly updating this data, showing green arrows and bullish market news right next to the assets, they give users a compelling reason to open the app multiple times a day. It's financial data acting as pure engagement content.
Okay, let's talk about the ultimate retention and viral engine, the IPO, the initial property offering. This is straight out of the modern growth playbook. Think Binance Launchpad or a highly anticipated sneaker drop. They are heavily gamifying asset scarcity. They aren't just listing random suburban houses, they're listing world-famous landmarks like the Sydney Opera House or Liberty Island. From a growth perspective, what creator partnership structure would maximize this? Imagine partnering with massive finance and real estate YouTubers, giving them exclusive ambassador access to a property drop, and incentivizing them to bring liquidity from their audiences. It literally turns a real estate transaction into a global viral event.
And they're pioneering this IPO model with a massive $750 million pipeline. This creates a growth engine built on absolute FOMO, fear of missing out. By applying visual countdown timers to these exclusive assets, the interface basically forces users to return to the platform the exact moment trading begins. If you're a growth strategist, this is the holy grail, right? An organic re-engagement trigger that requires zero ad spend. Users are voluntarily setting their own phone alarms to log back into your platform simply because the asset is just that culturally significant and scarce.
So, we've seen the mechanics, the 100K risk-free hook, the $100 minimum entry, the high-speed UI, and those viral IPO drops. But let's zoom out for a second and ask ourselves this. If you can pull out your phone and seamlessly day trade global landmarks like the Opera House or Liberty Island with zero friction, how quickly does the world's oldest, sleepiest asset class become its most viral financial product? If they actually crack this code, what on earth does the future of ownership look like? Definitely something to keep an eye on.